Here are the crypto top headlines covered in this video. The Memecoin Supercycle theory is converting crypto unbelievers. Next, Bitcoin ETFs hit $20 billion milestone as price remains stuck in downtrend. Also, decentralized vacation rental platform Dtravel joins Fetch.ai network. Welcome to Crypto Top Headlines, where there are no speeches on my opinions, just bringing crypto's news to you. I would greatly appreciate it if you would click on the like and subscribe buttons as well as the notification bell. It does help support the channel, so thank you in advance for doing so. Now, on to these headlines. Our first top headline, Memecoin Supercycle theory is converting crypto unbelievers. The Memecoin Supercycle theory has spread quickly, convincing many of the potential for big profits. Investors and memecoin analyst Murad Mahmoudov's Memecoin Supercycle theory has gained traction among traders. The theory, in short, states that a confluence of factors will create an essentially unending supercycle for meme-centric cryptocurrencies. But unlike other crypto market narratives, with complex technical explanations and mechanics, meme coins appear to rely solely on community, emotion, and the promise of wealth. Despite the lack of meme coin fundamentals, traders are drawn to the sense of camaraderie and the promise of rapid gains. Kyle Kemper, who has developed political meme coins such as Make America Healthy Again, or MAHA, argues that the Memecoin Supercycle doesn't signal the death of fundamental analysis, but rather a shift in the metrics used. Critical analysis of projects, teams, and missions is being replaced by factors like how strong a project's Key Opinion Leader, or KOL, game is, along with volume and chart performance, he told Cointelegraph. The apparent success of the Memecoin Supercycle theory among crypto traders indicates a deviation of their preferences. Memecoin investors are looking for 24-hour or less returns, whereas a typical venture capital firm has a 7-year outlook. Basil Ismail, CEO of investment analytics platform BlockCircle, attributes the rise of meme coins to the increasing maturity of crypto traders, stating that many traders have experienced at least one market cycle, gaining valuable lessons from their experiences. Ismail believes veteran crypto traders have realized that most tokens marketed as providing technical solutions, so-called utility coins, lack real intrinsic value and utility beyond speculative price movements. Mahmoudov covered this matter during a presentation at Token 2049, quoting an ex-user who argued, "Nearly all of the tech in crypto is a smokescreen designed to sell you a token that does nothing." Ismail believes most utility token valuations stem from their meme component, estimating that around 70% of a utility token's value is driven by speculation. He said that traders shaped by past experiences are wary of being burned again after witnessing crypto projects with supposedly solid technological foundations soar 100x in 3 months, only to collapse by 99% in the same period. Right now, traders are acting like sheep. They're just shifting their attention and their capital toward memes. Meme coins are also fueled by a very strong sentiment that is anti-venture capitalism and anti-private equity, said Ismail. He explained that investors have felt misled by venture capitalists who often release locked tokens on centralized exchanges, dumping them on unsuspecting retail investors. Meme coins fundamentally don't try to deceive you and lie and try to make false promises and uncomplicated expectations. People value that. The love for memes, combined with the power of memetics, has created a social and psychological phenomenon where people want to unite with like-minded people. We are all congregating, sharing joint beliefs, said Ismail. Ismail noted that while the motivation may seem superficial to some, the strength of a shared ideal within a community of investors is significant. He cited the unprecedented phenomenon of the AMC and GameStop stock runs. They rally the troops, bringing a young, vibrant, and energetic community together around an ideal or philosophy that they can make a long-lasting impact. The Memecoin Supercycle is super unsustainable. Despite the apparent success of the Memecoin Supercycle, some doubt its long-term sustainability. Jameson Lopp, co-founder of crypto custodian Casa, told Cointelegraph he believes the memecoin frenzy is unlikely to last and may be misguided. Pseudonymous crypto market analyst and trader Crypto Rand explained that memecoin economy thrives on hype, driven by impulsive traders chasing a quick buck. This mindset fuels extreme volatility and rapid liquidation cascades. Crypto Rand told Cointelegraph that the success of meme coins lies in their marketing and hype, comparing them to clothing trends that come and go in a blink. Crypto Rand said he sometimes drops money into meme coins, stating that it has the same value as a bet on a soccer match or the U.S. elections. Meme coins can hardly be an investment rather than quick trades. Angel Vercetti, founder and owner of the Dogecoin Foundation, criticized Mahmoudov's supercycle theory, telling Cointelegraph it's based on investors growing irrational due to collective mental and hormonal shifts. He concluded that the state of investors in the meme coin financial markets is basically indicating a mental illness. For Vercetti, a market model that bases its growth on a greater level of delusion among market participants doesn't sound like a sustainable economic model. Since meme coins do not intend to create any utility, they can only keep growing purely due to the growing delusions of investors, he said. Vercetti explained that initial coin offerings went through a similar process where an investor would have a 1% chance of succeeding, but at least some attempted to have a vision and build something. He pointed out how some legit projects have emerged from the ICO explosion, such as Tezos, Cosmos, Chainlink, BNB, and Basic Attention Token, among others. Lopp believes that in the long run, the market will sort out this type of delusional investing, as projects that are building castles in the clouds are doomed to revert to their true value of zero. Lopp advocates for projects that offer a solution or a token that can be useful for any activity, especially if the project desires a sustainable life cycle. Projects that focus on delivering actual utility and value, rather than zero-sum games, will do just fine by ignoring the hype and continuing to build toward their goals, he said. Kapil Diman, CEO of quantum-resistant digital ledger Quarium, told Cointelegraph, utility tokens are not just speculative instruments, but essential components of decentralized ecosystems. He said, without this strong technological foundation, the entire blockchain industry risks stagnation. Meme coins, driven by speculative frenzy, may generate quick profits, but they cannot sustain the long-term growth and credibility of the space. Mahmoudov has a lot to gain from the meme coin hype. Observers have also pointed out that Mahmoudov stands to profit personally from the proliferation of his meme coin narrative. Some folks will happily delude themselves that they're going to magically get rich for one reason or another, said Lopp. Often it's because someone who has an actual plan to get rich needs them to believe a narrative. On October 9th, on-chain investigator Zach XBT claimed that Mahmoudov allegedly holds $24 million in meme coins. This may suggest he's putting his money where his mouth is, but it also shows he has much to gain from Memecoin Supercycle narrative taking off. On-chain analytics platform Look On-Chain reported that Mahmoudov made $23.6 million in just 4 months thanks to the surge of Memecoin SPX 6900 or SPX. Lopp said that the success of meme coins reflects the nature of permissionless systems where people will inevitably do foolish or even scammy things. Let me pause here for a moment. If you're getting value out of this video, please click on the like and subscribe buttons as well as the notification bell. Our next top headline, Bitcoin ETFs hit $20 billion milestone as price remains stuck in downtrend. Bitcoin price remains in a 7-month downtrend despite the record ETF net flows. Spot Bitcoin exchange traded funds in the United States reached a significant milestone in net flows, even as Bitcoin's price remained stuck in a 7-month downtrend. US-based spot Bitcoin ETFs crossed $20 billion in total net flows on October 17th. The $20 billion is the most difficult metric to grow for ETFs, according to Eric Balchunas, a senior ETF analyst at Bloomberg, who wrote in an October 17th X post. Bitcoin ETFs have crossed $20 billion in total net flows, the most important number, most difficult metric to grow in ETF world, for the first time after a huge week of $1.5 billion. Despite the continued ETF inflows, Bitcoin's price has not risen above 68,300 since June. The world's first cryptocurrency remains in a 7-month downtrend since March, Cointelegraph data shows. It only took U.S. spot Bitcoin ETFs 10 months to cross the $20 billion net flow milestone, which suggests significant investor interest. In contrast, it took gold ETFs approximately 5 years to cross this milestone, Balchunas said. Bitcoin ETFs crossed $65.4 billion on-chain holdings, but price remains subdued. Bitcoin ETF inflows started picking up on October 11th after 3 consecutive days of net negative outflows. However, on October 11th, also brought over $253 million worth of cumulative net inflows, marking the start of a 4-day winning streak for ETFs. The U.S. ETFs amassed more than $458 million worth of BTC on October 16th, according to Farside Investors data. Thanks to the continued inflows, Bitcoin ETFs surpassed $65.4 billion in cumulative on-chain Bitcoin holdings, representing 4.9% of the current Bitcoin circulating supply, Dune data shows. Is Bitcoin's 3-month historic rally still in play? Some analysts are predicting a 3-month Bitcoin rally up to 92,000 starting in October, which is based on historical chart patterns and Bitcoin's average monthly returns for the fourth quarter. During Bitcoin halving years like 2024, BTC has historically rallied for 3 consecutive months following September's downtrend. Bitcoin has averaged 21.47% returns in October, 46.8% in November, historically the best month for Bitcoin price, and 5.4% average monthly returns in December. During the previous Bitcoin halving year in 2020, the price rose over 27% in October and over 42% in November in a 6-month rally that lasted until March 2021. Our next top headline, Decentralized vacation rental platform Dtravel joins Fetch.ai network. Dtravel's AI agents will bring peer-to-peer rentals to Fetch.ai's blockchain. Decentralized peer-to-peer vacation rental platform Dtravel announced on October 17th that it has joined the nonprofit Fetch.ai Foundation. It also announced the launch of the first AI-powered travel agent for developers on the Fetch.ai marketplace. Dtravel's decentralized home-sharing platform was launched in 2021 with the expressed purpose of providing an alternative to centralized vacation rental platforms such as Airbnb. Fetch.ai is a decentralized open marketplace platform where developers can develop, deploy, modify, and integrate AI agents on the Fetch.ai blockchain. According to the October 17th announcement, Dtravel's intelligent vacation rental discovery agent is now available for developers in the Fetch.ai developer marketplace. Essentially, the tool allows developers to integrate Dtravel's peer-to-peer networking agent, which is powered by AI, into their projects via Fetch.ai. Peter Bush, chairman of the Fetch.ai Foundation, called the collaboration a significant step toward a more efficient, intelligent, and user-centric travel ecosystem. Decentralized travel. The travel industry is dominated by a handful of centralized businesses such as Expedia and Priceline, but targeted travel businesses such as Airbnb also represent a significant portion of the vacation industry's capitalization. Decentralized travel offers an alternative to the intermediaries-based paradigm and enables end-to-end solutions for travel and accommodations. In practice, this could lead to lower costs for both renters and property owners when it comes to vacation rentals and home sharing. It could also serve as a beacon for the entire decentralized finance movement as the tech boom of the 2010s gives way to the decentralized technology movement that has accelerated in recent years. Cynthia Huang, CEO of Dtravel, said that the entire travel industry can benefit hugely from AI. It requires a two-pronged approach to be successful. The first is developing the technology, and second, and most importantly, creating an ethical framework for collecting and using data that will power these agents, said Huang. So this concludes Crypto Top Headlines. If you haven't already done so, don't forget to click on the like and subscribe buttons as well as the notification bell. Also, leave your thoughts in the comments and share this video with your friends and family. Thank you all for watching Crypto Top Headlines, bringing crypto's news to you.